This is Bazaar Morning Call, broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Tuesday morning and we are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant, with me my colleague Sonia and Nigel. Morning, guys.
Hi, good morning, Prashant. Good morning, Nigel.
Morning.
Well, after yesterday's steep fall that we saw, it's going to be interesting which way things go today. Of course, lots of pockets like PSUs, etc., have been under pressure. So a reality check, so to speak, for the market. But let's see, today the implied opening is suggesting a bit of green.
Well, indeed, and let's hope we can build onto that because yesterday was a weak session to say the least. And on the flip side, guys, at least weather is really good, right? In Mumbai in February, I've not seen, I don't think in the last many years it's been so pleasant.
Chilly.
Yeah, chilly and pleasant.
So let's hope that also stays good.
Yeah.
But weather in the markets is what we are here to kind of quickly assess in terms of how things are likely to be. And, yesterday we'll come to the Nifty, Bank Nifty and the indices, the frontline indices in a bit, but the broader markets. So yesterday was the first big crack in the PSU rally after a long time since the rally actually began. Perhaps the single largest day sell-off in the PSU index in the recent history. 4.5% gone there on the CPSE Nifty index. Remember, last Tuesday, and of course, we kind of mentioned it last Tuesday, but I guess the numbers would have been around the same. The weekly RSI on the CPSE index had hit about 95. Even if it had dropped to 90, even 85, anything over 70 is generally considered overbought. We were running at 95. So some cool-off perhaps was in the order of things, and it's impossible to know when it'll come. Yesterday, it came. Violent sell-off in many names. It's a long list yesterday, and we'll put some of these names out in a bit. I think about 6-7 names which sold off about more than 15%, and I think about 15 names which sold off more than 10% each. So pretty violent out there is what we saw. I'll tell you what, in a typical sell-off like this, like the one that we've seen yesterday in a sector which has done so well, the people who sort of try to sell the first, who'll sort of exit out of the doors, the first thing whenever there is weakness are people who have probably just gotten in the last leg, right? Looking at momentum, really no conviction in that sense, but just to play for the gains because they were coming so easy and so fast. And that is the shakeout which kind of exacerbates and it becomes a 3-4% kind of a cut on the indices. That's what I think we saw yesterday. If you're wondering if yesterday was exceptional, was it exceptional? Actually, it's not exceptional because every month, this is actually the Nifty small cap index that I'm talking about. Every month except November, we've had a between 3 and 4% correction, at least in one single day. Actually only one day. Look at that. In sort of February of, going back actually all the way, September of 2023, October of 23, December of 23, and of course yesterday as well, we had sharp sell-offs which came through. And then of course the market repaired and started to move higher. The question is, will we see something similar or it's going to be a little different? My sense is perhaps there is a little bit more in terms of pain left, some more consolidation because yesterday was just the first day when that reversal actually started to happen. Now let's just address the global stuff, right? Very quiet, not very much new in that sense. The S&P was down absolutely flat. The Nasdaq was absolutely flat. Actually, it's almost unchanged. The 10-year yield, 4.18, dollar index 104, nothing really. Oil prices holding at 82. It's almost as if you can pick up the session from last Friday in the US and not very much would have changed. Tonight, you get the US CPI numbers, which perhaps will get you some indication, at least in the very near term, about what the market wants to do next. Yesterday, for example, we were asking the question whether the market is starting, at least in the US, starting to treat good news as good news and not something to be afraid of. So I think it'll be interesting to see that. On the Nifty, just to circle back on the levels, we broke Friday's low and we also ended below the 20-day moving average yesterday. The next, in a way, target, also becomes a support naturally, is the 21,450 kind of level. 458 is the exact level. This is a 40-day exponential moving average. It's not very far away, 150 points out from where we are. Hopefully that'll be held and the market consolidates without further price damage. But if that is broken, you're looking at a deeper pullback. Bank Nifty broke below Friday's low as well, and the fall perhaps may be extended. We've been talking about that 44,429 level that is very close by now. and that is the recent sort of swing low that the market had. And then roughly 44,000 is where a few other supports come in at. So that's a very near-term picture on the Nifty Bank. And of course, on the way up for the Nifty Bank, because it's underperformed the Nifty, the 20-day and the 40-day are the resistance levels. But I mean, the advice is just wait, let the market cleanse itself out, maybe a day, 2 days more, and then start to look at opportunities once again. It'll give you enough opportunities. There's no real hurry. The GIFT Nifty is indicating about a 50-point higher start. Sonia.
Absolutely, and today is going to be an action-packed day because everyone's going to want to know what's happening with the PSUs, right?
Indeed.
Yesterday, you saw there was profit booking across the PSU stocks. So the Nifty CPSE index, the PSU Bank index were down about 3% apiece yesterday. And there was, weak earnings, which sort of put a bit of a reality check in many of the PSU names. There was high delivery-based selling in many names yesterday, whether it was NHPC, IRFC, SJVN, delivery selling of almost 800 crores in NHPC, 500 crores in IRFC, and about 400 crores in SJVN as well. However, this morning, there are strong numbers that have come through from a couple of PSU names, whether it's Coal India, whether it's SAIL, good numbers that have come through. So I'm going to be very interested to see the reaction to those earnings. If the street reacts to it well, then perhaps, the worst is over for the PSU space, you never know. But if there is selling pressure post these numbers yet again, then you know that, the PSU rally might be done for now. Defensive spaces like IT and Pharma are doing well. In fact, Nifty IT and Nifty Pharma index are up 4% this month. So definitely when the market is cautious, they move towards these defensive spaces, and these are sectors to look at. There is that MSCI rebalance that will lead to inflows of around $800 million to $1 billion. So keep an eye out on that. And on the Nifty, the next level that I'm watching is that around the 21,460 odd mark. So keep a crucial eye on that level on the downside. In terms of flows, the buying continues both from domestic and foreign institutions. So yesterday, DI has bought about 1,700 crores, FI has bought 126 crores. But I'm going to watch out for a lot of stocks today, especially names like Paytm. There's a big downgrade that has come in from Macquarie this morning where, they talk about the risk of a mass customer exodus from Paytm, and hence there's a huge target price cut. They've cut it to 275 from 650 earlier, so that's not looking good at all. So plenty of stocks in focus, but toss it across to you, Nigel. What are you looking at?
Well, Sonia, a quick point on that MSCI emerging market, right? India's weight has gone to around 18.2%. Just around a few years ago, we were at around 8 to 9%. So that's really the big, weightage increase for India in the last few years. A quick recap of yesterday's highlights, though. We were saying that the institutions didn't sell, right? But the FI participation itself was 40% low if you compare it with February averages, looking at the gross volumes itself. Next up, it appeared yesterday there was a bit of a reallocation that took place. That is, movement from some of those broader market stocks to some of those larger cap names, namely IT and Pharma yesterday saw a good amount of flows. And the third point for me was the Nifty Bank had a weak session. It ended closer on the 200 DMA. In the past, we saw it bounce off here. You don't want to decisively break that. Otherwise, in fact, we'll be bracing ourselves for a deeper correction. Let's find out what happened yesterday. We ended lower, and the FIs, they have added some long short positions. Not very, very large. No, there wasn't any big shorting out there, but the short positions are at around the 66% odd mark. The PCR, though, has come down to around 0.85. So it's a distance away from that 0.7 odd mark because there was a call writing that we saw yesterday. You had the 21,700, 21,900 call. Both of them did see a fair bit of addition, which brings us to the levels. Going by the options data, going by the technicals of the market, well, the 20 DMA, that's the one that got breached yesterday. Now, all eyes are on the 50 DMA. I'll tell you what, most traders are positioned that we won't see a level that breaks this 21,000, 21,100 odd. Though in the near term, that's the support level you're looking at. On the Nifty band, the 200 DMA, well, we ended closer to that mark. But the recent low that I'm looking at is at around 44,400 odd. And the Nifty Financial Services Index, well, that plays out the weekly expiry as well. Two stocks I'm looking at, one on the upside, one on the downside. Now, yesterday, the PSUs came in for a smack. But Coal India, the numbers look very, very good out there. India's entire economic growth will lead to higher power consumption. Higher power consumption means higher demand for coal. So they have volume growth in place, and they have cleaned up things quite a bit, on the operational side of things as well. So Coal India is a stock that I'll be looking at because it corrected close to around 5% yesterday, expected to open up in the green. And on the flip side, Hindalco is a stock that I'll be looking at on the downside. Remember, the street doesn't like any big capex announcement. They'd already announced some capex. Now they've gone ahead and they've upped some part of that capex. So the numbers on Novelis were in line. The problem is the capex guidance is something that will spook investors. So I'd like to see how much that stock corrects in today's session. But let's see how this goes, guys.
All right, thanks a lot for that. So plenty of stocks in focus as we kickstart a brand new day of trade. On the equity side, here's what you'll get to see. Vikas Jain of CLSA says, despite the $3.6 billion of buying, the ownership of FPIs in Indian equities fell close to a decadal low at the end of December 2023, while much stronger inflows from domestic mutual funds took up their ownership to a new high. He adds that both foreign FPIs and domestic funds moved from large caps and mid caps to small caps. Vikas notes both notably, cut weight in banks, autos and industrials, while moving into NBFCs, staple, energy, healthcare and IT. FPIs also turned neutral on NBFCs from underweight. FPIs and domestic mutual funds had notable divergent views on HDFC Bank, Maruti, L&T, Axis Bank and Infosys, while their actions were the same on Reliance, Bajaj Finance, HUL and IndusInd Bank.
Okay, well, let's get you some money market views as well. This is Abhishek Goenka of IFA Global, who says that they expect the flow picture to be favorable for the rupee. However, the RBI is likely to continue mopping up dollars aggressively, thereby putting a firm floor under the dollar-rupee pair. He expects the rupee to trade between 82.7 to 83.4 that's a cross-currency, and volatility to continue to remain under check.
All right, and on the bonds, you have Vishal Goenka of IndianBonds.com saying the CPI series came back lower at 5.1% last evening, with realized inflation lower than forward guidance post the somewhat bearish RBI policy last week. He says the next few will come from CPI numbers in the US tonight, followed by important wage inflation and growth readings from UK and Europe later in the week. He expects the 10-year benchmark bond yield to trade in a range of 7.07 to 7.12%.
Well, a lot of stock-specific action track for you. We get to that in just a bit in our special Top 10 segment. For the time being, we run you through the list, looking at Coal India, Bilibili, Phoenix Mills, Time Technoplus. They will be reacting to positive news flow, but you have Hindalco, Bharat Forge, SAIL, HEG, Galaxy Surfactants, as well as All Cargo Logistics that will be reacting to negative news flow.
All right, well, that's what's coming up in terms of specific stocks we will address in just a bit from now. But